What is up, you guys? Thanks so much for joining me today. It's your boy, the Finance Bro, and in this video, we are going to be taking a look at shares of Robinhood, see if this is a good long-term buying opportunity for investors to get into the name today. All values that you'll see within this video are as of market close on April 20th, 2026. And as always, this video is not investment or financial advice and is solely for entertainment purposes. Let's dive right in here. This is the past 12-month price chart for Robinhood shares. You can see that within that time frame, investors received an amazing 121.65 share return. Shares are actually trading above the 50-day moving average in the green line, but below the 200-day moving average in the orange line. I also want to mention that on that 1-year basis, there is a technical sell signal with the 50-day moving below the 200-day moving average, which is not something we want to see on a technical basis. Here I want to point your attention to a few key items. You can see that there's 23 analysts that cover the share price of Robinhood. They have an average price target of $104.46. That does imply around a 15% share price return from where shares traded on market close on April 20th, 2026. And I also just want to mention there, I'll go back to this chart. You can actually see that shares are trading below their 52-week high and their all-time high. They've actually had a peak to trough decline of 60%, but they're still trading 40% below where they traded around October, November of 2025. So even though there's a 15% average target price on the 23 analysts that cover the name, there is actually, should be, still great upside in the name longer term, even to get to that 52-week high or that all-time high. You can see that in the 52-week range there, where they peaked off at $153.86. Also, I want to show you guys the earnings per share. In 2021, you can see a significant decline in EPS growth, actually around a negative $8 per share on EPS. But you can see by 2027, there's an EPS projected to be $2.68 a share. From 26 to 27, that does imply a give or take 27-28% earnings per share growth through that 26-27 period. That is actually not bad, considering you see there at the bottom right the sales growth of Robinhood of 51.7% year over year and a good 10-year trend. And even though you see that 51.7% sales growth over that past 12 months, the 10-year trend doesn't actually really reflect that due to the significant growth. And that big chart there, that green graph that you see, is an indication of the 2021 meme stock boom that saw an influx of retail investors signing up to the Robinhood platform. And I'll touch on why that's important and why Robinhood has actually diversified their business model away from that in the later part of this video. But right now I want to look at the profitability, and you can see gross margins on Robinhood at 95%. Amazing profitability and an amazing 10-year trend. And you can also see that net margin of 41.8%, one of the highest net margins of any company in the S&P 500. And the valuation metrics that we want to use for Robinhood might be more skewed towards the PEG ratios, as this is a fast-growing company. And I'll touch on this valuation chart next, but you can see that trailing PE of 44.5 and the forward PE of 40.1, still relatively cheap for a growth name. I know the gold standard is around a 20 to 25 PE, but for growth companies, around a 40 to 45 PE, as long as the underlying fundamentals are growing, is not an overvaluation in any means on that valuation metric. And that's important just because, like I said, you can see through 21, 22, and 23, there was no price to earnings ratio reporting because, like you saw in that EPS right here of 21, 22, 23, which correspond with this, having negative earnings. And when they came out, you could see there in the forward PE of 7,637.9 was the 5-year high for the forward PE. Now they're trading around 40, near their 5-year low. Again, this is a company that when they IPO'd was getting ahead of itself, but this is one of the examples where you can see a company can be overvalued at a time, but can grow into its valuation as long as earnings and fundamentals like revenue and sales continue to grow. And that's why we invest is for the long term, not the short term. And this is a good estimate of growth over the next few quarters. And the really important graph is the bottom one there. And you can see that dotted line, which is the sales month over month growth and year over year of 24%. And you can see growth in the coming quarters towards the Q3, Q4 of every quarter of any financial institution. They usually do see a higher inflow of assets, and Robinhood has seen that in the past in December and September, and should continue to see that in the coming quarters. Like we saw before, Robinhood is a profitability powerhouse. You can see gross margins here of 50.5 in December of 2020, and they've continued to grow to 95, almost doubling within a 5-year time frame. Net margins going from negative $200 million to 41.8%. My apologies, 200.9% negative net margins to a 41.8% net margin in December of 2025. That is a huge swing. And I want to mention the operational efficiency of Robinhood. You can see the revenue per employee and the net income per employee steadily growing over the past 10 years and are projected to grow. And that is an indication that the company is operating on a very efficient basis and is not the largest expense for any company is employees. And they are not having to worry about overcompensation in terms of having to pay people to do mundane and repetitive tasks. And this also transpires to positive employee engagement, which in turn, theoretically, should produce more output for the company and inevitably shareholders. And you can see here the financial statement. Again, this is just stunning numbers to look at. You can see the sales revenue over a 5-year compounded annual growth rate of 36.3, gross income on that same metric of 54.6. You're seeing operating income at 173.9% 5-year compounded annual growth rate. You can see that going from negative $3.66 billion of operating income loss in December of 2021 and swinging that all the way, which is phenomenal growth. And that's why you see that 173.9% 5-year compounded annual growth rate to a $2.126 billion in operating income by December of 2025. Great 10-year trends. You can see that in pre-tax income, which is the same value essentially as the operating income that you see there. EBITDA growing, earnings per share growing. And it's very important, I want to mention here, that you can see the maturity of Robinhood over the years, not just as a company, but on management as well. They are well known to have a very young board, and that is not a detriment whatsoever. But at the same time, they have learned from their mistakes in 21, 22, where they issued a lot of equities and diluted shareholders. Now you can see through 23, 24, and 25, that green chart there of the share repurchases and a significant ramp up over the past 5 years. And that's something that we want to see as shareholders, considering that Robinhood doesn't really pay a dividend, or doesn't pay a dividend at all, I should say. But that share repurchase does offer an artificial, in a sense, dividend to shareholders of growth companies. So I just want to point to a few bullish points for Robinhood here. As, like I mentioned, some of those valuation metrics, like the PE ratio that a lot of people fall back on to value a company, Robinhood is a growth company. So valuations alone and valuation metrics, I should mention, are a very important factor in investing in any company. But for a growth company, you also got to look at the long-term trajectory and projections of management, not just on their projections of their metrics, but also on the operations of the company. And the bullish case for Robinhood in 2026 centers on its successful transition from a simple trading app to a comprehensive quote unquote financial super app. And the company has shown its strong ability to diversify its revenue streams away from just the volatile transaction fees that they've had in the past, whether that's the ECN fees, the electronic computer networking fees, spreads on foreign exchange, options contracts, and so forth. And one of those robust growth segments of Robinhood is the Robinhood Gold subscription service. Now, the Robinhood Gold ecosystem has become a significant driver of Robinhood's bottom line. As of early 2026, Gold subscribers actually reached record highs of 4.2 million users, which does represent a growth of 50% year over year. Just incredible metrics, no matter what we look at on valuations or on the underlying business, whether that's sales, net income growth, operating income growth, or just subscription revenue growth and attrition rates. You're seeing high double digit, and in some cases, depending on the metric and the segment, triple digit growth of Robinhood businesses. Just incredible to look at. But why the Robinhood Gold is a very important factor for Robinhood is it increases the stickiness of the users, keeping them on the Robinhood platform and offering a better lifetime value LTV for short to users of Robinhood. And obviously, if users are on your platform more and using it more, that should in turn generate more revenues, considering the bread and butter still of Robinhood is trading. And it's important, like we saw, I mentioned in 2021, which had a large influx of users onto Robinhood, which was because of the meme stock craze, whether you were getting into GameStop, BlackBerry, AMC, and so forth. That was what Robinhood was known for. But boy, oh boy, have they come a long way. They offer different products like the retirement IRA, which as of 2026, the retirement assets under custody surged over 100% year over year to roughly $26.5 billion, which is quite incredible, and essentially double from this time last year. The interest on lending has actually grown 113% and has become a pillar of the business, increasing margins and having a higher utilization rate of cash sweeps from its users. And the expansion into credit cards and broader banking services positions Robinhood as a primary digital bank alternative for the younger demographic. And what's very important here is something that we've seen in previous videos, whether it's Costco, Meta, Amazon, and so forth, is the international growth segment. Now, for Robinhood, the launch of stock and ETF tokens in the EU and the pursuit of MiCA licenses does allow it to serve over 30 countries in the EEA, which is a huge new market and segment for Robinhood. And a significant part of Robinhood's growth has actually come over the past year from prediction markets. Now, they're part of a joint venture to operate a CFTC licensed derivative exchange, which did close in early 2026. This allows them to offer institutional grade futures and event contracts. Obviously, it's great to have the retail investor base, but to have that institutional clientele, and more importantly, the institutional money, will be able to drive bottom line and increasing margins for Robinhood, and will also increase the assets under management as well. And crypto has been a big part of Robinhood as well. A lot of users flocked to the platform as it was one of the early adopters, and the acquisitions of Bitstamp and WonderFi bolstered their global crypto footprint and add regulated platforms in growing markets such as Canada. And we did see improving financial discipline for Robinhood. Like I mentioned, they have one of the youngest management teams out there. Again, that's not a problem whatsoever, but through experience, they have had more financial discipline and also just through having more revenues, have had a bigger cash pile to use, which means they're not having to tap the debt markets, nor are they having to dilute shareholders as well to fund these acquisitions, like I mentioned, of Bitstamp and WonderFi. As always, guys, thank you so much for making it to the end of the video. Please do hit that like and subscribe button. It does mean a lot to me. And stay tuned for the next video.